All right, in this episode, I'm going to talk about using investments to fight climate change. This is Impact Financial Planners with Bill Holliday, making sustainable, responsible impact investing easy for socially conscious investors who want to make a positive change in society through their investments. Impact Financial Planners is a fee-only financial planning firm specializing in sustainable, responsible impact investing, and you can find more information at impactfinancialplanners.com. All right, thanks for joining me on this episode. I am recording from our home in Hermosillo, Mexico, so there may be some noises that are a little different than in the office and a little more echoey here as well. Thanks for joining me. I was at a conference, Sustainable Responsible Impact Investing Conference in the end of 2019, and there were several talks about combating climate change through investments, and I'm going to highlight some of the things I heard, and I also want to just share, this is on the blog as well, but some investment options, fossil fuel free investments and some alternative energy investments. So investments can be used to combat climate change. Climate change can be addressed using the strategy, this SRI, Sustainable Responsible Impact Investing. And SRI is a strategy consisting of screening, positive and negative screening, shareholder advocacy, so it's including or excluding. Shareholder advocacy is if you're a shareholder, you're an owner, you're a boss of the company, and you can make a change. And community investing, so providing capital to organizations or individuals that otherwise might not have access or at lower rates than they'd have access to. Using those tools, you can make an impact, change companies, especially if we get together as investors, we can pool our resources owning a larger percent of these companies and make real changes. So here are some of the comments I heard. I thought this was interesting. With climate change, we have three options: mitigate, adapt, and suffer. So the more we mitigate, the less we need to adapt, less we'll suffer. If we don't mitigate, then we'll need to adapt a lot and we'll be suffering more. Climate change is at the top of the list of impacts for institutional investors right now. It's in the forefront of SRI investors. Current financial system causes climate change, or I guess it doesn't discourage climate change. It's looking at just pure return on investment. We need to improve the financial system by investing in companies that are environmentally productive. The public equity market has about $80 trillion. Most of the money is invested with only financial impacts in mind. Changing will shift the investments to address climate change, but it'll also require policy and technological development. So investments aren't a fix-all for climate change. It's smart to invest with climate change in mind, purely for financial return. In the long run, it'll help your returns. You need to know your exposure to risks of your investments. There are several tools to help do this, so it can help your financial return too, to have in mind a few things with this. I guess how climate events will impact companies, if there's resources that may never be extracted that could hurt their bottom line. So keeping it in mind can help your return. By divesting and paying attention to the data, companies will be better at addressing climate change. Impact reporting has improved. Look at your portfolio and its impact on climate change. One, to do good, but the other because it's a risk to your portfolio. Climate change is not priced into the market. That's the opinion of someone who was speaking. Increasing temperatures and more climate events will negatively impact businesses. There is an equity risk score that shows the company's exposure to heat stress, hurricane stress, water risk, etc., and other climate change risks. With these tools, you can identify risks and opportunities. I guess that's the other point. If there's going to be changes, it may not all be negative for all companies. Some companies will be able to take advantage of this. Short-term thinking is the problem. If you look at the long-term, all portfolios are exposed to risk from direct physical impacts and transitional risks. There's been an increased demand for climate change impact data over the last 2 years. Good. Currently, lack of consistent reporting information is a problem. It would be helpful if companies disclose location of their assets, type of assets, so the risks can be determined. So this is purely on a return of assets point of view. It'd be good to have more data so climate change can be factored into the value of those companies long term. There's There's an opportunity to find companies that will benefit from climate change. Solar, wind, the alternative energy sector, probably a lot of other companies that'll benefit from climate change. Best path forward would be for governments to put a fee on carbon tax, and wait for the economics to work out. Alternative energy would be significantly less expensive than fossil fuels. I thought this was a good point here. It's difficult to figure out the footprint of various investments or different energy sources. It's not as easy as saying all alternative energy sources are good. For example, copper is important for alternative energy. There needs to be a life cycle analysis. So how long do solar panels last? What's the cost of the environmental footprint of producing them? There is more. It's not quite as simple as just saying solar panels, they're from the sun, it's all good. There is a footprint for producing them and a lifetime for those. Fossil fuel-free investment options. So I put a list in the blog. These are I put a list of, I don't know what it is, 20 mutual funds. These are mutual funds that are fossil fuel-free, and I tried to get a variety of them. So there's large US, mid-size US, small US emerging markets, foreign, real estate. All of these are trying to be, one, they're members of US SIF, so they're organizations that are active in engagement and in shareholder advocacy for many of these, and they're also avoiding fossil fuel investments, which, one, you're not invested in that. I mean, the real piece is you are not going to have that exposure. So if there are assets that are left untapped, you're not exposed to that, the potential carbon bubble, where those are just going to have to be write-offs because the governments or regulations are not going to let those be extracted and burned. So mutual funds, they tend to have a little higher expense ratio than an exchange traded fund, but they are more actively managed, they are engaging more in general. And then there are exchange traded funds, which are generally just indexes following indexes. Again, this is a list of 8 exchange trade funds that are exposed to various asset classes, various areas, bonds, stocks, and they are green, not exposed to fossil fuels. Alternative energy investment options. I have a list, and this is a mix of stocks, exchange trade funds, and mutual funds, and just several holdings in solar, in alternative energy, wind energy, clean energy, low carbon, green technology. Just a list of them there. Some of them are actively engaging in shareholder advocacy, trying to make changes, but they're all just going to be exposed to this sector. Be careful with this sector. I mean, I wouldn't recommend in general overexposing your portfolio to energy just to be in renewable energies. It's going to move. It's going to be a volatile sector, moving with oil prices, moving with other factors, government regulations. So just be careful, make sure it's appropriate for your portfolio, discuss it with your financial advisor, but there's some options for you. These aren't recommendations. It's a resource. Here's a list of options for you. Okay, I guess those are the main pieces. Give you some investment options and just discuss what I heard at the conference about combating climate change through investments. Thank you for listening to Impact Financial Planners. This has been brought to you by Impact Financial Planners. If you need help with any part of your finances, please contact Impact Financial Planners. We'll set up a free meeting, impactfinancialplanners.com, where we have a free informational ebook about sustainable, responsible impact investing. It's at impactfinancialplanners.com/SRI ebook. All right, as always, I appreciate your feedback, email, comments, make a note on YouTube, wherever you see this, on our blog, on our podcast, call, write. Love to hear from people. It encourages us to keep going. And if you like these podcasts, please subscribe to YouTube, iTunes, write a review, and it makes it easier for other people to find us and keeps us going. All right, I hope you had a nice new year and take care.